Hi students, welcome to Ajitaha IAS Academy. In this video, we will discuss how financial inclusion improves policy transmission, that is the monetary policy transmission of the Reserve Bank of India. Because yesterday there was a lecture by the Deputy Governor of the RBI giving a keynote relationship between a vice versa and a two-way relationship between financial inclusion and monetary policy. So let us discuss these two things in detail and we will understand how these two things are interrelated. So first we will start with the definition of monetary policy and then the definition of the financial inclusion, and then we will discuss the interrelation in between these two things. First thing, monetary policy. Monetary policy means it is a policy of the central bank. That is, in the case of India, it is the Reserve Bank of India, and the primary objective of the monetary policy of the Reserve Bank of India is to minimize inflation, that is, to keep the inflation in control, and as per the agreement between the Reserve Bank of India and the Ministry of Finance, it has to be in the range of plus or minus 4, that is 4 plus or minus 2, that is within the range of 2 to 6. Okay, so one of the objectives of the Reserve Bank of India is to keep the inflation in control within the range of 2 to 6, keeping in view the output, that is growth, that is economic growth, that is how much the industry is manufacturing of goods and services. So keeping in view the output, the predominant and the primary objective of the Reserve Bank of India is to keep the inflation in the control, that is within the range of 2 to 6. And to achieve this, it focuses on the interest rate, controlling the interest rate, and it also focuses on the controlling of money supply and also of credit. How it will achieve is through repo rate and through reserve repo rate and through marginal standing facility rate. We will make videos of these concepts also in another videos. Okay, so RBI's major target is to keep the inflation at control. Okay, why to do this? Why? Because in order to achieve the human welfare at a maximum level, that is to maximize the human welfare, RBI's role is to keep the inflation at control. How these two things are interrelated, we will discuss in detail in this video itself. And second thing is financial inclusion. What is financial inclusion? Let us divide these two terms. One is finance and is inclusion. Inclusion means including. Financial means into the financial matters, that is to savings account, current account, into the banking system, into the insurance system, into the credit system. Who? Of the individuals and businesses. Currently, some few years back, that is 10 to 20 years, most of the individuals don't have bank accounts. Even 6 years back, there was no bank accounts. People are saving money in cash, in terms of cash. So there was no access to insurance, into banking facilities. So according to World Bank, individuals and businesses having access to useful and affordable financial products and services which serve their needs, that is transactions, payments, savings, credit and insurance, in a responsible and sustainable way. This is called financial inclusion, that is for both individuals and businesses. Access to transactions, that is through online transactions, to explain in a simple way, and also to savings through payments. For example, we are doing through Google Pay now and through Paytm, that is small finance banks and payments banks. All these things are examples of financial inclusion. So now in this video, initially we understood what is monetary policy. The monetary policy is a policy of the RBI whose initial focus is to control the inflation, keeping in view the growth, and the financial inclusion is to bring the products and services of the financial stuff to both individuals and businesses. Okay, now we will understand how these two things are interrelated and how these two things are beneficial to each other.